Very good morning, everyone. So let's start with the next session on the total income. This is page number 9.32 of the study material. Question number 4. It says that Miss Purvi, age 55 years, is a chartered accountant in practice. She maintains her accounts on cash basis. Okay. Now she is maintaining her accounts on cash basis. Now, what does this statement means? That all the expenses and all the income will be taken on cash basis only. So whatever, let's say, for example, I'm talking about expenses. So any expenses which is paid during the year only, that will be considered. So previous year, 24-25 is the year. So any expense which is paid only during the year, that is the last day is 31st March, right? 25. So if it is paid up till 31st March, then only we will allow it. If it is not paid, then we will not allow it, any expense. Not only those 7 expense of 43B, not only those, all the expenses which are paid only up to this date, that will be allowed. Okay. So they have said that she is maintaining her accounts on cash basis. Her income and expenditure account for the year is given as follows. So 31st March 2025 ending income and expenditure account is given. Let us see what are we need to compute. We are required to compute. They are asking us compute the total income and tax payable by Purvi. Okay. Do you need to compute just the total income or the tax also? Tax also, right? By Purvi for assessment year 25-26, PY 24-25 in the most beneficial manner. Now, what does it mean by most beneficial manner?
Different income
That
or
correct. So we have to actually compute the taxes as per the optional regime as well as the default regime. So whichever is more beneficial to her, we will take that. So in this case, they are asking us in other way. It is the other way is asking us that we have to compute by both the regimes. Okay. So let us see her income and expenditure account. Income and expenditure account is same like P&L account. So if we'll see the expenses, salary to staff. So she is a CA in practice. Salary to staff is a normal business or profession expenses. Salary to staff, we are okay. Stipend to article assistants. Can we give stipend to our interns? Yes, we can give to the article assistants. So this is also business expense. This is also business expense or professional expense. Incentive to article assistants. Please, what do you think? Whether this is allowed or not allowed? Incentives to article assistant. What do you think? Arup, what do you think? Should it be allowed? Bala?
allowed
It's
if we
normal
pay.
bonuses. It's normal bonuses, etc. So it should be allowed, right? It's not. So we are giving incentive to our staff, incentive to our trainees. Does not matter. Allowed. Office rent. They are saying it's office rent. Okay, allowed. Printing and stationery. Again, it will be allowed. Normal business expenses. Meeting, seminar, and conferences expenses. We are okay with it. Purchase of car for official use. What do you think? Are we okay with that? Sugandha, what do you think? Smriti, what do you
Okay.
think? Are we okay with that purchase of a car for official use? We are not okay.
Yes.
Why? Because it is a capital expenditure. So this is a capital expenditure. We should not allow the capital expenses. We should only allow the depreciation on that. So purchase of a car is a capital expenditure. So we will not allow it. However, we will be allowing the depreciation on it. And they are telling us that it is used for official purpose. So we can claim the depreciation. What is the rate of depreciation on cars? 15 or 30? It would be 15, 1-5. 30 is only for those assessee who are engaged into that business of flying, hiring, etc. Right? Hiring of cars. Repair, maintenance, and petrol of the car. Okay, if it is for office purpose, then obviously it is allowed. But if it is for personal purpose, then it will not be allowed. If it is partly personal, partly official, then only official expenses are allowed. Personal expenses portion will not be allowed. Simple. Traveling expenses, okay, if it is official travel, obviously will allow. Tell me about this. Municipal taxes paid in respect of house property.
Not allowed, sir.
It
Not
is not a
allowed. We should
business
add the
expense. It's not PGBP.
House
It is a
property.
house property thing. So it is not a PGBP. We will take it in house property. And I believe that now she has house property income also. So that is the reason they are giving this. Let us see that. Okay, so these are my debit side of my income and expenditure account or P&L account. Look at the credit side. The credit side says fees earned. Fees earned, audit fees, professional fees, taxation fees, okay, consultancy fees, okay. So we are okay with all the fees because it is a professional receipts. Dividend on shares of X Limited, gross. So it is not net, it is gross. It is before TDS only. The figure is before TDS. It does not mean that TDS is not deducted. TDS was deducted, but we are recording it at the gross value. Correct? So TDS must have been deducted because if any company is paying you dividend and you understand if it is more than 5,000, they deduct TDS at the rate of 10%. So whether the TDS was not deducted, it was deducted, but we are recording it before TDS value. Got it? So this is the gross value. So it is not a PGBP income, it is an IFOS income. So you understand, you will delete it from here while computing your PGBP and you will be taking it into your IFOS. And no need to gross it up because it is already grossed up. It is already before TDS. Income from UTI, again, Unit Trust of India. It is an IFOS income, same treatment. And gross amount. Gross amount means this amount we have recorded. See, gross does not mean that the TDS has not been deducted. It is deducted, but we are recording it at the gross value. Correct? So 7,600, it's okay. Now, honorarium received from various institutions for valuation of answers paper. So she's a chartered accountant also. So the institute is saying, okay, please evaluate the papers also. And they have given them 15,800. What type of fees it is? So Sugandha is telling me. Sugandha, what it is? Is
Professional
it
fee.
is it PGBP? No, it is not PGBP. So you are getting any honorarium. What is an honorarium? It is just a small piece of amount as a respect we are giving you. Because your time is more precious, but still we can afford to give you this much only. So that is called in your honor we are giving you. So it is nothing but IFOS income. A rent receipt from residential flat let out 85,600. So you understand it's a residential flat which is let out. So it is again
house property.
house property income. Correct. Now this is the income and expenditure account. Let us see the information. Allowable rate of depreciation on motor car is 15%. Even if this information would not have been mentioned, we know that the depreciation rate is 15% on cars. Value of benefits received from clients during the course of profession is 10,500. Please tell me what we will do with this value of benefits. We have not seen any value of benefits here. Now they are giving me an information that the value of benefits received from clients during the course of the business is 10,500. What you will do with this? Sorry. What you will do with this? Second point.
We should allow the
We should add, sir.
PGBP.
Correct. Correct, Vignesh Bala Siddharth. So it is our PGBP income. We understand section 28. Section 28 says that any gifts, any perquisites, any facilities which you receive from your clients, from your customers during the course of your business or profession, that is your PGBP income. So we should add this in our PGBP income. So it is the gift from the clients during the course of the profession. It is our PGBP income. Section 28 specifically tells this. The third one, incentive to article assistant represents amount paid to two article assistant for passing CA intermediate examination at the first attempt. So the incentive which we have seen, there is an incentive they have given to the trainees, to the article assistants. It is because of they have passed the intermediate examination. So what you will do with that incentive, whether that incentive which is debited over there, it is allowed or not? Yes. So we are giving them whatever they have achieved, that's okay. Correct. So as a motivation, we are giving this expense. And to whom we are giving it? None other than to our own employees. So we can give them performance incentive. So not necessary because they are doing, it's a CA firm. They are actually a good resource because they have passed their examination in the first attempt. So that is the reason we are giving them this incentive. So it is okay with it. So there is no issue. So you will not do anything of it. You will just write the information note that it is allowable expense. Repairs and maintenance of car include 2000 for period from 1/10/24 to 30th/9/2025. Okay. So they are saying that repairs expenses includes 2000 rupees. So we have seen that there was repairs of the car and it includes 2000 rupees. What are these 2000 rupees? They are telling me that this relates to the period from 1/10/24 to 30th/9/2025. So it is from 1st October 24 till 30th September 25. So we have prepaid it and our year is getting over on 31st March 2025. So this is 1 year amount, 2000 rupees we have paid. What you will do? You have paid
only 1000.
Okay, Vignesh is saying allow only 1000. What about others? So it is 2000 is for 1 year, out of which 6 months relate to our year and 6 months relate to next year. So how much we will allow?
Amount spent in our year, 6 months.
For the first 6 months, which is related to this year, Siddharth, we should
Yes,
allow.
sir. Yes, sir.
What do you think, Sugandha? Sugandha is saying fully allowed. Bala, any ideas, Priti, Aru? We are following
I think
cash.
we alone because
We are following cash basis. Correct. We are following cash basis. So now it does not matter that this expense relate to any past year, this expense relate to any future year. Because now we are following cash basis. So whatever is paid during the year, whatever is paid, let's say we have paid last year expense, last year expense, 10 years prior expense we have paid this year, or we have paid any amount in advance for next year, next to next year, any other year we have paid in advance. Does not matter. Now it says when cash basis says that whatever is paid during your period is an expense. So we are okay with it with entire 2000. Had it been accrual basis, and generally if the question is silent, we always assume accrual basis, then you are correct. Then we would have disallowed that 6 months expense of 1000 rupees. In that case, we would have added it. But since we are following cash basis, so it is fully allowed. Everybody okay with this now?
Yes, sir.
Yes, sir.
Now, fifth, salary includes 30,000 to computer specialist in cash for assisting Purvi in one professional assignment. I believe that you know what you should do of this. Cash paid more than 10,000. So 30,000 is paid here. So it will be disallowed. Traveling expenses include expenditure incurred on foreign tour of 32,000, which was within the RBI norms. So we have traveling expenses includes expenditure on foreign tour. So there was traveling expenses and she went on a foreign tour. Please tell me 32,000, whether it will be allowed or not allowed. So she went outside. So they have not mentioned, it is personal. No, if it is not
If
personal,
it is for business purpose,
correct. If it is for business purpose, Vignesh, it is allowed. So they are saying this is as per the RBI norms also. Please tell me if RBI norm says that only 25,000 would be allowed. If RBI norm says 25,000 would be allowed, then how much you will allow out of 32?
25,000 allowed, 7,000 disallowed.
See, I have never told you RBI norms during the classes. Have I told you anywhere? No. RBI norm, what is RBI norm saying is we are least concerned. If it is a business expense, it is a business expense, right? So whether they are saying that 32,000 is allowed by RBI, that's okay. Even RBI don't allow it, I am okay to allow it 32,000 rupees. We are doing income tax, not RBI norms. Understood, Vignesh? So even RBI norms is saying
Yes, sir.
anything or they are not saying anything, we will say RBI norms, please shut up. We are doing income tax, it's a business expense, it is allowed, right? So RBI norms says regarding foreign currencies, etc. So we are not concerned with that. So it's a business expense. The businessman is saying that it's an expense. And for what purpose? It is for business purpose. Section 37 says any expense for a business purpose, if it is revenue in nature, allow. That's it. If it should not be capital. We have never read anywhere that it should not. It should be as per the RBI norms. No, it should be allowed. Medical insurance premium on the health of the dependent brother and major son dependent on her amounts to 5,000 and 10,000 respectively, paid in cash. Okay, medical insurance premium. Why they have given this information? 80D optional regime. Okay, she has paid medical insurance premium for dependent brother and dependent son. They tell me for whom it can be allowed. See, for 80D, what is the definition? We have two categories in 80D: self, spouse, and children. And correct, and children, and that too in 80D it says dependent children. In 80C it says any children, right? Dependent, non-dependent. So life insurance 80C, any children. Medical insurance 80D, dependent children. And second category is parents, just parents. Brother and sister is not there. So for brother, we will not get this 80D. For son, we can get it. But the problem is that everything is paid in cash. So we'll not get anything. Because we understand for health insurance premium should not be paid in cash. It should be through account pay check or through banking mode, ECS, etc. It should not be paid in cash. Only the cash which is allowed is preventive health checkup. That to 5,000 rupees in total. So we'll not give 80D over here. She invested an amount of 10,000 in national savings certificates. NSC, she has invested the amount 10,000 rupees. Where we will get the deduction of investment in NSC? 80C. 80C under optional regime, we can get this deduction. She paid 70,000 towards advanced tax during the previous year 24-25. So this is the advanced tax she has paid. So once we will be computing the tax liability, then we will be deducting the advanced tax. That's it. So compute the income and tax payable by Purvi as per the most beneficial manner. So you have to first, should you calculate the optional regime and default regime simultaneously by drawing a line in between, one column for optional, one column for default? I would not recommend. No. For total income questions, don't do this. If it is a simple question of any particular head, 5-6 marks, then it is okay to do that, but not for total income questions. The total income questions, we have already discussed yesterday that how you should do it. So tell me which regime you want to go with first. Optional?
Yes, sir.
Okay. Answer 4. Computation of total income and tax payable of Mrs. Purvi. Assessment year 25-26. And we are following first optional regime. Now, how we will start? Just see. We have 5 heads: salary, house property, PGBP, capital gain, IFOS. Do you think that she has salary income? Anywhere have we seen salary income? No. House property income? Yes. PGBP, of course, yes. Capital gain, have we seen capital gain anywhere? Have we seen capital gain anywhere? No.
No, sir.
IFOS? Yes. So there was some dividend, UTI, etc. income. IFOS is there. So we don't have in this question, we don't have salary, we don't have capital gains. Otherwise, we have other 3 heads. So let us start with the house property. So we have been given that this is the rent she has received. Rent she has received, and there is no information regarding the municipal value, fair rental value, standard rent. So we will take the GAV as the actual rent only. So gross annual value, it was given to us that she is receiving 85,600, right? Less municipal taxes paid. For house property, municipal taxes also we have paid. So they have mentioned over here 3,000 rupees. So we'll get the NAV 82,600, then minus 24A standard deduction. And if you don't remember the section, that's fine, at a rate of 30%.
24,780.
24,700.
780.
780. 780.
57,820.
57,820, and there is no interest on loan. So this is 57,820 is our house property income. Then we have PGBP income. For that, we can make a working note, number 1. Then we have IFOS income. And what I told you regarding IFOS, generally your IFOS is sitting on the credit side of the P&L account. The credit side of the P&L account, the first income is your professional receipts. Second is income is dividend, and we should take the gross value since it is already gross. So there is no issues. So dividend 10,520. Then we have income from UTI also. Sorry, 524 and 7,600. 10,524 and 7,600 is income from UTI, and it is also gross, so we don't have to do any grossing up because it is already the gross value. Had it been a net amount, I would have done the grossing up, and you know how to do the grossing up. So let's say if it is a 10% tax, so whatever we have received net, it is 90%. So you will do the back calculations. Simple. Honorarium 15,800. Any other thing? Then there is rent, that is not IFOS, it is house property. And here, if you will see in information, just look at your information for a minute, that if you are leaving any of the IFOS, so this is depreciation, this is the value of benefit that will go in PGBP, incentive to clerk or article assistance, repair, salary expenses, traveling expenses, medical insurance, NSC, or advanced tax. No, there is no such other IFOS. So this will be my only IFOS.
33,924.
Okay. 33,924. So we'll calculate our PGBP and then would be our gross total income. So let us calculate our PGBP for here. Everybody done till here? So our
Yes, sir.
for PGBP we can make a working note. Net profit as per P&L account or income and expenditure account, whatever you want to write it, like okay. So it is given that the net profit is 928,224. If it is a loss, you can start with the negative amount 928,224. Okay. Then we will see the our debit side. Step number 1, net profit. Step number 2, expenses side. Step number 3, income side. So step number 2, expenses side. Salary to staff. I'm not reading the information right now. Just the debit side. Salary to staff, we are okay. Stipend to article clerk, okay. Incentive, okay. Office rent, okay. Printing and stationery, okay. Meeting and seminar, okay. Purchase of car is not okay. At purchase of car, that is capital nature expense, 80,000. Then the next thing is repair, maintenance, petrol. So as of now, we are okay. I'm not reading any information. Traveling expenses, okay. Municipal taxes. Municipal taxes is not okay because it is of house property. 3,000. Municipal taxes. This will go in house property. So I'm not okay with that. So we are done with the second step, expenses. Now come to the third step, income side. Third step says fees earned. We are okay with this fees earned, this much fees. Dividend income. Have we taken it in IFRS? We understand we have taken it in IFRS, but in PGBP we should delete it. So whatever is sitting over here, right? As of now, it is gross. So whatever is sitting over here, just delete it. Had it been net amount also, for while computing PGBP, you have to see that what is sitting in my P&L account. What is disturbing my P&L account? Right now, 524 is disturbing. So just take out 524. Had it been after TDS, just take out that. So in PGBP, we will only see that what is the amount sitting. So we have to adjust our profit with that amount only. While taking in IFOS, that is the second thing. Taking in IFOS, we will be taking it in the gross amount. Correct. So 524, it is IFOS, 7600 is an IFOS, 15800 is an IFOS, and 85600 is also not PGBP, it is house property. So we have to delete all these four. Less dividend, UTI, honorarium, and rent of property. 10,524, 7600. $15,800, 85,600. Correct? Any other thing which is left in my credit side? No. So I'm done with my first three steps. Now let us go to the information. If there is any information related to PGBP, So my first information says that allow depreciation on car at 15%. Even if they would not have told me, I would have allowed it, right? So as of now, they have specifically told me, so it's good. Less depreciation on car. And this car was 80,000 rupees. And 15% is the rate of depreciation on car. And we have not been provided that whether it is used for less than 180 or more than 180 or more. So in that case, we'll assume that it is used for 180 or more. 80,000 into 15%. 12,000 would be the depreciation that we will get on car. Next is value of benefits received in the course of profession is 10,500. So 10,500 will become our PGBP income, and we have not taken it. If we would have already taken this in PGBP in P&L account, then it's okay, because assessee has already recorded it. But if you have not recorded, it is an unrecorded income and it is a PGBP income. So now please record it. So 10,500, please add this in your PGBP. This is perquisites or facilities from customers. $10,500. Positive. It will be added to my income. So whatever is negative, I am writing it in brackets so that I should not make mistake. Whatever is positive, I am writing them normally without brackets. Incentive to article clerk, we are okay. Or if you want to show it as a note, or rather it would be a good idea not to make a separate note, just show it right here. So what I'll do, I'll write incentive to article assistant it's a PGBP income. I will tell the examiner it's a PGBP income. That is the reason I'm not doing anything. That's it. So I have shown it right here. Now there is no requirement to give a separate note, because now I have shown it to the examiner. The only motive is that you have to tell the examiner. Either you tell it by the adjustment like this. So I have done the adjustment, but the adjustment amount wise it was 0. But I have shown it. Or if you are not writing it over here, which I will not recommend, I would recommend that write it over here only. But in case if you are not writing it over here, then show it separately as a part of a note. Simple, easy language, one-liner you have to tell the examiner. Sorry. Now, fourth is repair and maintenance expenses of car, 2,000, and 1,000 relates to next year. So again, you will not do anything, but you have to tell the examiner that why you are not doing anything. So what you will do, repair and maintenance, rupees 1,000 related to previous year 26-27. So it belongs to next year, but still does not matter as cash basis. So as we are following cash basis, so therefore we will not do anything. 0. So you have to show this. See if examiner is giving you any information to work on and you need to ignore it. So you have to tell the examiner that why I'm ignoring it. So either make it part of your total income format and write 0 in the outer column, or if you want to make it separately, then you can also do that. This one is actually better. It will save your time. Now, they are saying salary includes 30,000 rupees paid in cash. Salary in cash, 30,000. No need to remember the section. If you remember, then you can write, as of now, you can write 48.3. 40 capital 8.3 is the section. Everybody done till here? Now,
Yes, sir.
traveling expenses within the RBI norms. So you will not do anything. Everything is perfect. So 32,000, it already includes 32,000, which is not as per the RBI limit. So again, you don't have to do anything. You have to ignore this information, but before ignoring, you have to tell the examiner that why you are ignoring. Foreign travel is allowed. Foreign travel for business purpose is allowed, irrespective of RBI norms. So it is allowed. So you will subtract, right? And how much it is? 30,000. Correct? No, I've done a mistake. What mistake I have done? Can you tell me? So they are saying
It is
traveling
already
expense
included.
include expenditure. Correct. Traveling expense include expenditure incurred on foreign travel, 32,000 rupees, which was within the RBI norms. So it is already been debited. So we will not do anything. So we will not do anything. So foreign travel for business purposes is allowed, irrespective of RBI norms. Whatever RBI norm is telling me, we don't have to care about it. Whether they are telling that it is only allowed 5,000, 10,000 does not matter. If we have paid extra, so that's okay. That is our business. We know that how to actually run a business. So if we have incurred some extra expenses, that's okay. But that is for business. It is not personal. It is for business purpose only. So that's fine. Now, medical insurance premium. So this is 80D. She invested 10,000. This is 80C. She paid 7,000. This is advanced tax. So now there is no information regarding PGBP. The other information is something else now. So these other information is something else. So in this case, now my PGBP is done.
9,20,200.
9,20,200. Is this that Bala?
Is it?
It's the
PGBP 920,200. So we'll take 920,200 over there.
GTA 10,11,944.
10 lakh,
11,944.
11,000, 944. Okay. So 10,000, 10 lakh, 11,944 is my GTI. Less chapter 6A. Since we are following optional regime, so there is no restriction on 80C, 80C to 80U sections. We can allow them. So 80C, actually he has invested in NSC 10,000 rupees. Then 80D, medical insurance for dependent brother not allowed, for major son is not allowed. So we'll show that for dependent brother, not allowed, and for major son not allowed. Okay. 80D, 80C, advanced tax that we'll be computing later. So this is the deduction we have. 10,01,944 is my GTI, sorry, total income. Let me know if you are done with this. Done?
Sir.
Okay. Now, since we have total income now, less. Or now, tax on above. So now you will be calculating tax on above. And since you have opted for the optional regime right now in this part, so whether she is a senior citizen, let us see. No,
Up
she
to
is
3 lakh.
55 years of age. She is not a senior citizen. She is 55 years of age. So normal, how you will do this? What is the slab rate? 2.5 lakh.
2.5.
So first 2.5 lakh is nil. Okay, first of all, tell me whether it has any special income, whether it has any capital. It does not have any capital gain. It does not have any lottery income. So it is normal income only. Next one above. First 2.5 lakh is nil. Next 2.5 lakh is 5%. 12,500. His income is going till 10. So 5 to 10. Next 5 lakh is at rate of 20%. So 1 lakh. And remaining 1944. But what I should do is total income to be rounded off. I would have done 10,01940. So 1940 at rate of 30%. 582.
1,13,082.
1,13,082. Correct, Vignesh? Now,
Yes, sir.
will there be any rebate? No. The total income is more than 5 lakh rupees in the optional regime. So there would be no rebate. Second, will there be any surcharge? No, my income is not touching 50 lakh. So there would be no surcharge. So plus 4% health and education cess.
4,523.
4,523. So you will get your tax liability.
1,17,605.
1,17,605. Don't round it off right now. First, deduct the TDS also. TDS. So there was some TDS which was deducted. So TDS was deducted here, dividend. So they have mentioned gross, but we understand that TDS is applicable on it. So this is a gross amount. What is the rate of TDS? 10%. So on 10% gross amount, 1052, we can take no issues. TDS on dividend. It is 10% of the gross amount, 10,524. So 10,524, we have already deducted the TDS on dividend. And then income from UTI 7,600. Also, there is a gross amount. It says that there is some TDS which is deducted.
Say 10% on 10,524, only 10,520.
Tell me, Bala, again.
Sir, TDS, tax liability. So in working notice. So no, sir, you fully mentioned the amount. So 10 lakh, 10,524, you fully
Oh,
mentioned.
10,524 is 1052. Correct now? It is 10% of this. Correct. Thank you. So TDS on UTI dividend, 10% of 7,600, 760. Correct. Now no other TDS. So this is the TDS, and
And
also this assessee has
advance tax.
deposited some advance tax. Correct. How much? 70. It is given to us that he has deposited some advance tax of 70,000 rupees here. So we'll take that benefit also. So now this is called tax payable. And you can round off the final figure. So this is
45,790.
4793. And now you can round it off. Four five seven ninety. This is your tax payable as per the optional regime. 45,790. So tax as per optional regime is 45,790. Now we have to tell the assessee whether this option is beneficial for him or not. So we have to compare this with the default regime. So how we'll be comparing it? We'll be taking the GTI as the base. So we'll be taking the GTI as the base to compute the default regime GTI. And just see that this GTI is consists of three heads: house property, PGBP, and IFOS. Now you understand that what are the differences in optional and default regime in all the heads. So in house property, in let out property, there is no difference. So this would be same in default as well as in optional. In PGBP, we understand that there are three differences. One is your additional depreciation, it is not there. Second is 35 AD businesses, that hospital, 100-bed hospital, hotels, etc., which is not there. And the last one is that outside research contribution. Outside research contribution is not there. So it means all those three which create differences is not there. So it means that now there would be no differences. It is same as default. In IFOS, dividend, UTI, honorarium, there would be no difference. So it would be same like this. So my GTI is made up of my three types of income: house property, PGBP, IFOS. And now we can analyze that there is no such difference in these calculation. If we would have been done for the default regime also, we would have got the same answers. So this is my GTI as per the default regime only. Correct. So what you will show the second part, computation of total income and tax liability. Assessment year 25-26. And now you are following default. So what you will say, you will say that how the profits would be calculated. PGBP, you will say GTI as per optional regime is 1011,944. 1011,944. And there is any adjustment? The answer is no. There is no adjustment. So this will become the GTI as per default
Why you
also.
mentioned, sir? Why you mentioned PGBP over there?
Sorry, I didn't get sleep last night. Okay. Okay. GTI. Correct. GTI as per optional regime. GTI 1011,944. Little sleepy today. Okay. Now, GTI, we got it as per default. Now there is a deduction of 80C, 80D something, but we will not get any deductions over here. Less 80C, 80D will show that not applicable over here. So this is my total income. 10,11,944, which you need to round it off. 10,11,940. Text one above. There is no special income, so you can calculate as well slab rate. No need to show it to the examiner. You can calculate it. Just you can show that text one about slab rate, and you can calculate that on first 3 lakh we don't have income, 0 to 3, then 3 to 7, 4 lakh we have 5%, then 7 to 10, 3 lakh we have 10%, and then 10 to 12, so it would be 11,940, 15%. So it is 0, it is 20,000, it is 30,000, and 11,940 into 15%, 1791. You just do the total. 51,791 plus 4% health and education cess.
2071.
2071.
72.
Okay, you can take 72. So this would be
863.
53,863 less some TDS was deducted and some advanced tax was also there. So just pick up that figure of TDS and advanced tax. You don't have to show it again and again because you have already shown it. So 1052, 760 and 70,000. $71,812 was the TDS and advanced tax. $79,49. This is tax payable or tax refundable?
Refundable.
It is refundable, which is to be rounded off again. So what option he should choose? So the advice would be it is recommended to follow default regime. So it is recommended to follow the default regime. Understood, guys?
Yes, sir.
Okay. So as a homework, if you want to try now, please today try question number 5. This is page number 9.33. Try yourself this question number 5. Then we'll take some more questions. Two days more we'll take the total income questions. I have to touch AMT also in one of the total income questions. So 2 days more we'll do the total income questions. Then we'll move on to the GST portion then. Okay, bye guys. See you
So
tomorrow. Bye.